Hello, this is Will Allen with Sentara Capital. Yesterday, the financial markets had one of their best days of the year, and that was prompted by a really good news with the release of the inflation report for the month of October. But we're going to unlock a mystery today, and that is, with inflation coming down like it is, why is consumer sentiment still so low? Let's get into it with our market update. Yesterday, we got the release of the October inflation report, the Consumer Price Index, the CPI, and it came in cooler than expected, meaning the inflation reading was lower than what was expected by the markets. Month over month, the Consumer Price Index was flat with prices the previous month, and that brought the year-over-year increase in prices to 3.24%. Now, this was something that the most notable thing to come from this release was the market took this better than expected inflation report to mean that the Federal Reserve does not have to hike interest rates anymore this cycle. It was already trending that way before this release, but that was a notable thing that happened as a result of it. And then today, on the back of it, we got producer price index. This is basically wholesale inflation, what businesses are paying. And their prices actually dropped month over month by 0.5% over last month. The year-over-year number is 1.34% of business expenses over inflation over last year at this time. That is under the Fed's mandate of 2% inflation. Now, let's go back to consumer prices because this is really, really important. And I mentioned that it's 3.24% year over year. So prices are still going up. One thing I wanted to note is a big component in consumer inflation is for rents. And the government does this, the Bureau of Labor Statistics, one of the things they do is they ask homeowners, what would you rent if you were renting out your own house to yourself? What would you pay for that? And this is really, to us, this has always been a little weird. We don't really understand why they use this metric. It's not really a real metric, if you will. And so we wanted to examine this. On the inflation report yesterday, the rent/shelter component showed an increase of 6.7% year over year. Now, if we take a look at what actual rents are doing and take a look at this chart, you will notice here the rents component for last month were actually 1.2% lower than where rents were last year at this time. Okay, so what does that mean? If we were to take the real time, what rents are doing, and put it into the CPI calculation, the year-over-year number, instead of being 3.24% for the CPI year-over-year, it would be at 2.1%, as you can see right there, right at the Fed's target. Again, this is something that we believe, and it's a cause of frustration here because a lot of people believe the Fed should be using real-time shelter numbers instead of this owner's equivalent rent number. Now, let's shift gears for a minute. One of the big questions for economists and analysts with financial markets this year has been, the rate of inflation has been coming down pretty much all year long. And like we said, if you use real-time rents, the inflation rate is sitting right about at 2% year over year. So why is consumer sentiment so low with that being the case? So let's put up a chart of consumer sentiment and you can see what we're talking about here. And what you'll notice is if we look at the last 10-year average the Consumer Sentiment Index from the University of Michigan. It is the gold standard. This has been around 84. Today is at 60. It's declined for 4 straight months. And that doesn't make any sense when you take a look at the fact that wage growth has been very strong, consumer spending has been robust, jobs are very plentiful. But I want to pull up a chart of the Consumer Price Index of just the level of prices. So we're not talking about here what the change is month over month or year over year. Look at this trend. If you go back to 2010, and you will see between 2010 and 2020, prices just slowly and steadily increased. But look at what happened in 2021 and 2020, well, the back half of 2020, 2021, and 2022. Prices went up significantly. And again, we've talked about this many times. This was due to excessive spending by the government and by the Federal Reserve. Over $10 trillion of funds were printed or put into the financial system here. It led to extremely high inflation. And so the issue is that consumers are looking around and they're saying, wait a minute, you're telling me inflation's low, but I'm looking around, prices are still really high for a lot of items. And it's true that if you look at this chart, the level of prices is significantly higher than the trends that we saw over time. So this is something that is just the bottom line. Prices are not going to go back to where they were 3 or 4 years ago. But what the Fed can hope for now is that the price levels stop going up at the kind of pace that we saw in 2021 and 2022. And the good news we're telling you today is they pretty much have. Prices are pretty much back to the kind of trend they were at during the 2010 to 2020 period. So that's the latest we wanted you to know about. Again, the big takeaway here is because of this better than expected inflation report, the financial markets are saying, hey, the Federal Reserve is done with their rate hike cycle, and stocks of like that. We saw a really big increase yesterday. And I will note, we've talked many times, including with our video last week. If you haven't seen it, go check that out. But we talked about the fact that this October 1st through December 31st stretch is the best time of the year for the markets. We talked about the fact that 9 of the last 10 years stocks have been higher between that period, and in that 9-year period they've averaged a gain of over 7%. Last week we mentioned that for this fourth quarter so far, stocks are up about 2.3%. They're up over 5% in this stretch now. So it's been a really good week, basically on the back of the good news yesterday. Again, make sure and like and subscribe to our videos. If you haven't, turn on notifications with the little bell. We'll continue to give you these updates week over week. We're not going to be here next week. We will be in the office, but no video for Thanksgiving week. We'll be back in 2 weeks. Happy Thanksgiving to you in advance, and take care. We'll be back with you soon.